There's a popular video going around where someone claims living off dividends is just a fantasy. Some people agreed, others pushed back, but very few actually took a moment to think deeply about it. This video is not a reaction, it's an invitation to pause the hype and look at what really matters. Because maybe you've heard that same phrase, living off dividends is an illusion. Maybe you believed it, or maybe it hit a nerve, because deep down, that's your dream. But before you accept or reject that idea, let's ask, where does this dream even come from? In America, dividends often get treated like golden tickets, as if years of burnout and stress could suddenly vanish, all thanks to passive income magically landing in your account every month. It's the fantasy of financial freedom, bought in monthly doses of hope. But here's the truth. Dividends aren't magic, they're math. Let's break it down. Let's start with something simple, but that most people misunderstand completely. A dividend is not a bonus. It's not a gift. It's not the market being generous with you. A dividend is just a slice of the company's profit, shared with the people who own it. And yes, that means you, the shareholder. Even if you own just a single share, you legally own part of that company. That makes you a business partner. And here's where things get interesting. Let's say a company earns $100,000 in profit this year. It decides to pay out 40% of that to its shareholders. That's $40,000 being divided. And that decision, it's called the payout ratio. But watch this carefully. If a company ever tries to pay more than 100%, something is off. That means it's giving out more than it earned, which often means dipping into reserves, taking on debt, or even selling off assets. In other words, unsustainable. Think of it like this. It's like a dad giving his kid an allowance while swiping a maxed out credit card. Looks generous now, but that debt is going to show up sooner or later. And now let me give you a real-world style example that makes this ultra clear. Imagine a fictional company we'll call Donut Co. Because why not? Let's say Donut Co. made $500,000 in profit this year. It decides to pay out 40% to its shareholders. That's $200,000 in dividends. Now, let's say there are 200,000 shares available on the market and you own 1,000 shares. So what do you get? One per share, $1,000 in dividends. Simple math, right? But here's the problem. That $1,000 feels great. It lands in your brokerage account. You think, this is it, passive income. Maybe you even posted on social media, just made $3 in dividends today, #financial freedom. But hold on, let's pause right here and be brutally honest. That isn't freedom. That's hope in disguise. That's anxiety wearing an optimistic mask. Because getting some dividend income does not mean you're on track to live off dividend income. This is one of the biggest traps new investors fall into. They confuse the presence of dividends with progress toward freedom. So here's a question I want you to sit with for a moment and be really honest with yourself. Are these dividends enough to pay my rent, cover my groceries, pay for healthcare, fund my future? Because if they're not, then what are we really doing? Are we truly building wealth? Or are we chasing a word that sounds powerful but has no strength on its own? This is the moment where most people click away from the video. They don't want to hear that building passive income takes time. They don't want to know that $3 in dividends won't retire them. But you're still here. And that tells me something important. You're serious. You're not here for financial fantasy. You're here for financial reality. You want the truth, even if it's slower, even if it takes work. Because deep down, you know the long road is the one that lasts. So let's go deeper. Because if you want to actually live off dividends one day, you'll need more than excitement. You'll need a clear strategy, the power of time, and the magic of compounding. And we're going to break all of that down in this video, step by step. No hype and shortcuts, just truth. Stick with me. What you'll learn next might change the way you think about dividends forever. Let me share something most people never realize, and it's the kind of truth that can completely change the way you see dividend investing. You ready? When a company pays you a dividend, it's not giving you free money. Let me say that again, louder for the people in the back. You're not getting richer. You're just shifting money from one pocket to another. It feels like you're gaining something, But behind the scenes, nothing actually changed. Here's what really happens. Let's say you own a stock worth $2 per share. The company decides to pay you a $1 dividend. Awesome, right? Free money? But the very next day, something predictable happens. The share price drops to $1. Why? Because the company just gave away part of its value, and that value came from its balance sheet, which includes your ownership stake. So you received $1 in cash, but lost $1 in stock value. Your net worth? The same, just in a different form. It's like moving $20 from your left pocket to your right pocket, and then getting excited because now your right pocket feels heavier. But did you actually gain $20? Of course not. You just moved it around. Now, this is the part where people start scratching their heads. Wait, so does that mean dividends are fake? Am I just fooling myself here? And to make things even trickier, most stock charts online are dividend adjusted. That means they hide the price drop that happens when a dividend is paid out. So when you look at the chart, it seems like the stock kept rising, but in reality, that bump in your bank account came with a dip in your stock value. It's a financial magic trick, and you're the audience that never sees the sleight of hand. Now stop for a second, because this is where a lot of people click away from the video. Why? Because this truth is uncomfortable. It challenges the feel-good fantasy that dividends are free money forever. It forces us to look deeper, to actually understand what's happening with our money. But the fact that you're still here watching this tells me something about you. You're not here to be entertained. You're here to be equipped. So, are dividends a lie? No, but they're misunderstood. If you think of dividends as a magical bonus from the universe, you'll eventually get frustrated. But if you understand that a dividend is simply a way to access the value you already own, you start to think like a real investor. And here's where the story flips. Now that this money is in your account, you have two powerful options. Treat it like income. Buy coffee, pay bills, upgrade your iPhone. No judgment. It's your money. But remember, that dollar won't grow anymore. It's the financial version of eating the seed instead of planting it. Put that money back to work. Buy more shares. Own more of the business. Grow your slice of the pie. This is where compound growth begins to kick in, and it separates the dreamers from the builders. Every reinvested dollar becomes another worker in your wealth-building army. Let me ask you something. What are your dividends doing right now? Are they just sitting in your account like passengers? Or are they out there multiplying, like soldiers on a mission? Because here's the truth. Most people spend their dividends because it feels good. But the few who reinvest them consistently, those are the ones who wake up 10 years later and realize they've built a financial machine that works 24/7, even while they sleep. And we're just getting started. In the next section, I'll show you exactly how this compounding power can transform your future and the real math behind the financial snowball most people only hear about in books. Don't stop now. The next piece is where everything clicks. Let me show you a secret the wealthy understand and the average investor ignores. You've heard of dividends. You've maybe even received a few. But here's the real magic, the part that most people never use, reinvesting. But I don't want to just explain it. I want you to see it. So here goes. Imagine a company like a chicken. Each year it lays an egg. That egg, it's your dividend. Now you've got two choices. You can fry the egg, eat it now, enjoy the moment. Or you can let it hatch. Let that little egg turn into a chick. That chick grows, and eventually it lays more eggs. And those eggs hatch, and the process repeats. Before you know it, you're not just holding a chicken. You're managing an entire chicken empire. And all of that came from one decision. Don't eat the first egg. This is what compounding looks like in real life. Not theory, not motivation, just math, time, discipline. Let's go back to our example, Donut Co. 4 shareholders, each owns 25%. The company makes $1 million in profits and pays it all out. Each one gets $250,000. Nice, right? Here's what they do with it. Mark remodels his house. Jake takes the dream trip to the Maldives. You do whatever you want with it. But then comes Victor. Victor sees an opportunity. He offers you $250,000 to buy 5% of your share. You say yes. Easy money. Now you own 20%. Victor owns 30%. Next year, Donut Co. pays another $1 million in dividends. Here's the new math. You get $200,000. Victor gets $300,000. Wait, what just happened? Victor used his first egg to buy more chickens, and now he gets more eggs every single year. He didn't just consume his dividend, he multiplied it. That is compounding in action. That is wealth in motion. Now I know what you're thinking, but I only make $20 in dividends. What difference does it make? That's exactly why most people never build wealth. They think the number is too small. They think it doesn't matter. But here's the truth. Small numbers repeated with consistency become unstoppable. Let me ask you a quick question, and really think about it. If you knew that every dollar you reinvested today could multiply into thousands, would you still spend it on things that don't matter tomorrow? Most people would. That's why most people stay average. Still think I'm exaggerating? Let me bring you a fact. The economist Jeremy Siegel ran a study. He looked at what would have happened if you had invested just $1 in the U.S. stock market in 1871 and reinvested every dividend. No tricks, no leverage, just time and discipline. By 2011, that one would have become 250,001. Single dollar, turned into a small fortune. Not because of luck, not because of timing, but because of reinvestment. The investor who understands this doesn't look at a $3 dividend and laugh. They look at it and say, this is the beginning of my empire. So here's your fork in the road. Are you going to fry the egg and enjoy a nice breakfast today? Or are you going to build the farm that feeds you for life? This is the decision that separates the ones who chase financial dopamine from the ones who build generational wealth. Still think your $3 dividend doesn't matter? Think again. Because everyone wants a forest, but only a few are willing to plant the seed and wait. Now that you understand the power of reinvesting your dividends, what happens when you combine that with a smart, diversified portfolio that pays you year after year through good markets and bad? That's what we're covering next. And it's what turns passive income into predictable income. Stick around. What comes next is the strategy that most investors never figure out, but the wealthy rely on for life. So, can you really live off dividends? The answer is yes. But the real answer is, it's more complex than most people want to hear. Let's start with something most people forget. Thousands of Americans already live off dividends, just not the kind you see on a brokerage app. They live off the profits of their own businesses. Before they ever bought a stock, they built something real, and that business started paying them month after month. So let me ask you something. If Mr. Johnson can live off his local auto shop, why couldn't you live off a public company that generates billions? You can, but here's the catch. The problem isn't the dividend. The problem is the dream people attach to it. Let's be honest. Most people invest $100, get $2 in dividends, and suddenly they're declaring financial freedom on social media. But here's the truth. That's not freedom. That's false hope in disguise. Dividends aren't lottery tickets. They're measurement tools. They reflect what you've built, not what you wish was there. If your foundation is weak, your dividend will be too. So instead of asking, how much can I get? Ask, how much have I actually built? Because no structure stands tall if the base is made of dreams instead of bricks. Another truth that few talk about, dividends can disappear. They're not magic. They're not contracts. They're optional distributions of company profits. And guess what? Profits can shrink. Markets can crash. Companies can choose to reinvest instead of distribute. That's why smart investors don't bet the farm on dividends alone. They build layers of income stability, like real estate cash flow, bonds and fixed income instruments, emergency funds and reserves, growth investments for future upside. This isn't about being pessimistic. It's about being prepared. Let me share what some experienced financial planners do. They don't hope for income. They plan it. At the beginning of the year, they set a target. My portfolio needs to generate dollars per year. Then, as dividends come in, if it meets or beats the target, great, reinvest the excess. If it falls short, cover the gap from reserves. It's like managing a business. You're not reacting emotionally. You're tracking numbers, planning ahead, and staying calm, even in a storm. That's what separates a passive income chaser from a real income architect. Let's address a common myth. If my stock drops, my dividend must drop too. False. A stock can fall 50 cents and still pay the same dividend, because dividend payments are based on the company's profits, not the stock price, the company's decision to share those profits. That's why mature, stable companies often pay solid dividends. They've passed the hyper-growth phase, they've got cash, and they reward shareholders. On the flip side, high-growth companies usually don't pay dividends because they're reinvesting everything to scale faster. But eventually, every rocket slows down. And when it does, the profits turn to cash. The cash turns to dividends. And the patient investors, the ones who got early, start collecting income like clockwork. So let me leave you with this. Dividends aren't miracles. They're mechanisms. They're tools, not magic wands. Used right, they can provide freedom. Used wrong, they can create frustration. So ask yourself, am I using dividends to build a foundation, or am I chasing comfort I haven't earned yet? The wealthy treat dividends as a gear in the machine, not as the machine itself. If you want to live off them someday, you need to build the full system: structure, strategy, time, discipline, and most of all, realistic expectations, because the market won't save you, but your preparation might. Coming up next, we're going to talk about how to identify great dividend-paying companies and avoid the traps that wipe out lazy investors. What you're about to learn can help you spot long-term winners and build a portfolio that keeps feeding you for decades. Don't miss it. This is where things get real.